The last few years there's been hardly any trading at all, and I think it's one of those sectors that got really hit hard by it, and it's obviously a specialist sector as well. But certainly from the deals we're dealing with at the moment, there's going to be a massive spike in deals this year, so there's a lot more interest. And I think that's a combination of the fact that trading is starting to continue in those. I mean, I think I'd reiterate what the guys are saying about prime. I mean, the focus is really in 4 or 5-star prime city centre hotels. The secondary stuff is extremely hard to trade and very little interest. And I think the interest is coming from, I agree with your point, a lot of US interest, so that's coming. Russian interest, I agree again, so both Russian and American, which is on Joss's slides, agree with that. A lot of local capital, so local capital buying the best hotel in their city centre, they understand it well. These guys have amassed a lot of money over privatisations over the last few years. For them to buy the best hotel in the city centre, fantastic. And so it's really private capital, hardly any funds guys looking at the sector at all. But I think the key thing is we're going to see a lot more trading this year than we've seen in any of the previous years. And backed on, people seeing it's a great opportunity. The prices have been really interesting now. The rate per key is really quite low, and trading picks up with the GDP and starts to trade well. Very limited new supply in most of the markets. There are talk of new supply, certainly in Warsaw. Looks like there's going to be more supply, but very little funding for new supply. So again, the existing stock should do quite well.